okay, this stock that I was really bullish on is now way above my target price, and I am now going to slightly tweak my thoughts on it, but remain even more bullish and raise my price target even further above where the stock has risen to.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we're watching a recent discussion on Yahoo Finance between 4 panelists regarding the Jefferie's Tesla stock price target upgrade to $2,500 per share pre-split or $500 per share post-split. Watching this process unfold is quite fascinating because honestly, until recently, almost everyone in the mainstream finance media on Wall Street and particularly Yahoo Finance, these guys honestly have been completely clueless about what Tesla is. However, they're starting to catch on, and this is a really important process because, as I've said many times in the past, if the mainstream finance media's narrative is changing around a company, that is going to have a measurable effect on retail investment in the stock. So let's see what they had to say. But first, hey guys, if you're in the US and you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account and fund it with $100, you get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake using the link in the description. Let's get back to it.
Today we were talking about Jeffrie's latest note on shares of Tesla, the firm maintaining a buy rating and raising their price target on the stock to $2,500 per share. Now Tesla shares will split at the end of the week, so really this is a $500 per share price target. I guess if you see this video in a week or so, that's an upside, or that's raising their price target, I should say, from $1,200 previously. So more than doubling the expected value for Tesla here. And Shauna, I think it kind of speaks to a theme we've seen from a number of analysts covering a number of different companies, which is I wouldn't quite call it capitulation, but certainly there's a backfitting of, okay, this stock that I was really bullish on is now way above my target price, and I am now going to slightly tweak my thoughts on it, but remain even more bullish and raise my price target even further above where the stock has risen to.
Yeah, well, this is a fair point. How about that awkward moment when you're not Cathie Wood and you haven't had a 4-figure price target and next minute Tesla's gone 1,000, 1,500, 2,000, 2,200. What do? You chase the price target, you revisit your research, go, oh, what did we miss? Oh, pretty much everything. Let's try and figure out a way that this makes sense. Now look, it's a bit embarrassing for analysts to be chasing the price of Tesla stock, but at least they're taking a second look and gaining a more comprehensive understanding of the company they're actually looking at. Because prior to this recent run up in Tesla stock the last few months, most analysts were very bearish on the stock, looking at this as an automotive manufacturer and just scratching their heads. Now, suddenly, they're starting to wake up and smell the roses.
Yeah, Miles, I feel like every day we're covering another analyst that is almost chasing the stock here because it's been moving so much to the upside, they simply can't keep up. And this is exactly what is the case for Jefferies, because their price target, like you said before this, was $1,200 a share. So they're more than doubling it. And when you take a look at the call and really try to figure out the argument that's being made, I think it's hard to argue that the fundamentals have really changed. Like, it's almost a valuation call. They're chasing the stock. When you drill down to it, I don't think there's much that has changed about the fundamentals.
I completely agree with this. I've said it before. Nothing fundamental has changed about Tesla in the last few months. But what has changed is the insight, understanding, and clarity that many analysts and investors now have around Tesla's future and how dominant they will, not might, will be in electric vehicles, in battery energy storage and distribution, and more.
And I think you can make that argument for a lot of the calls that we've gotten on the street, not only on Tesla, but a lot of the other names that have performed extremely well over the last 3 or 4 months. When it comes to this call, though, it was interesting what this analyst from Jefferies pointed out, because one of the things he mentioned was growth expectation. And in that, he was saying that he still sees logic in this exuberance because of the growth expectations for 2020 to 2022 doubling since last September. So he's pointing to the growth there. And then also just the fact that Tesla has executed much better than many had expected during the pandemic. I think the fact that the pandemic shut down some of its factories, the fact that maybe there wasn't going to be that demand there on the buyer side, Tesla was able to navigate that tumultuous time, and we're still going through it, much better than I think many on the street had anticipated. So that, of course, is adding to the bull case here for Tesla.
Now, just on the expectations around demand and deliveries, I think this is one of the key areas that analysts have been completely dead fucking wrong on Tesla quarter after quarter after quarter after quarter. And the reasoning behind this is quite simple. Most of these analysts simply have no grasp of the concept of an S-curve adoption rate of a disruptive, innovative technology. What can I say? At the moment, electric vehicles make up around 2, 3, 4% of the new vehicle market, depending on where you're talking about. At some point soon, they're going to be around 100%. This is a huge trick that most of Wall Street is still missing. They're scratching their heads thinking, how on earth can Tesla possibly be selling millions of EVs in a few years? Doesn't make any sense. There's not enough demand there. The market's too small. On the odd chance that any analysts are watching, I've got a killer tip for you. Ready? This might take some time to explain. Take a seat, grab a cup of tea, whatever you want to do, and take notes. Tesla today produces more electric vehicles than anyone else on earth. And they're better than any other electric vehicles on earth. In fact, they're better than any other vehicles on earth. This point is not up for debate. Best value by far, safest, best performance. I could keep going. There is literally nothing that Tesla is not dominating on that actually matters to rational buyers. Sure, aesthetically, maybe they don't look the way you'd like. Okay, I get all of that. But dollar for dollar, there is nothing close to the value of Tesla. So, Tesla has the scale and the best product and a huge lead, and their lead is accelerating. And here's the kicker. Are you ready? Today, electric vehicles, 2, 3, 4% of the new vehicle market. In the future, they'll be 100% of the new electric vehicle market. If you can put 2 and 2 together, you might realize that guess what? Tesla's going to keep scaling production and they're going to keep selling every single vehicle they produce for years to come.
In terms of future growth, a lot of it has to do with Tesla's battery business. And we've been talking to a couple of analysts here on the final round, and a lot of them have been focusing more and more away from Tesla's auto business and more so to its battery business and what it can do there. So we have the battery day coming up on September 22nd. And in terms of what to expect, this Jefferies analyst saying that it'll set new benchmarks and ambitions to lead the pack cost. So that's the really important point here. It's less than $100 in the coming year. And then also the commentary on the 1,000,000-mile battery. I'm still a little bit skeptical about this, but any idea he's looking for of a battery that could last for 1,000,000 miles is what he is interested in hearing. So of course, if we do get any commentary on that, I'm sure the street will be reacting to that because Elon Musk, we know, loves to make these lofty and pretty, lofty promises, and we'll see if the bulls are able to justify what he's promising. But again, this is a stock that has risen, over 400% so far this year. So I think this is just another case of an analyst trying to chase the gains that we've seen so far this year, and therefore doubling a price target that he had all the way to $2,500 a share.
Well, Shauna, it's interesting. You say nothing has fundamentally changed, and yet it seems to me like quite recently the analyst narrative has changed and shifted, because this is the second note in a few weeks that we've discussed where the analyst is focusing away from just car sales and talking about software and, dare I say, services. Here we are again, like we heard so much about with Apple. And then, of course, batteries, as you mentioned.
Exactly right. This whole shift in terms of all these upgrades, etc., analysts going back, scratching their heads, going, what did we miss? Oh, hang on a minute. Now, the great news, guys, is still, I really don't think Wall Street's actually getting it. How many analysts have you heard talking about the autonomy opportunity of Tesla? Very few. Have you even heard a single analyst use the word auto bidder or virtual power plants? It may have happened. I can't recall. If anyone knows, let me know in the comments. Where are the analysts, apart from someone like Cathie Wood, where are the analysts actually talking about Tesla's actual future? Right now, it's like they make cars, and they might make batteries for other automakers, and that's about as far as the thinking's really going. So despite all these upgrades now and the narrative changing, there's still a very long way to go before I think that Wall Street's really clearly seeing what Tesla is and their inevitable future. Not just dominating electric vehicles, but dominating transportation, energy generation, storage, and distribution.
It was funny to me when this note said, that Tesla's competitive advantage in actual auto sales might be shrinking, but then they've got the software and the batteries to fall back on. I hadn't necessarily seen or heard of any compelling numbers that showed that any other car maker yet was really challenging Tesla on the EV side. I know many others have some models coming out, but it seems to me like it's still the sort of go-to prestige name in EVs.
Nailed it, my man, but I do just want to nitpick a tiny bit. He did use the word prestige to describe Tesla. Now, I acknowledge the price point on a Tesla at this point is certainly in the premium range. It's a little bit more nuanced than that. There's cost, and there's value. These are completely independent of one another. And in the case of Tesla, as we're seeing with the Tesla stretch, many people I've read in the comments, DMs, etc., who've never paid more than $15,000, $20,000, $25,000 for a new vehicle have stretched to buy a Tesla. Not because they thought, oh, this is so cheap, but they realized the value for every dollar they're spending is unmatched. And very smart consumers, and I do use the word very smart because let's be honest, a lot of people making purchasing decisions are doing so with their emotions, not their brain. Smart consumers who actually do the numbers will realize that the total cost of ownership now of a new Tesla vehicle is actually below many of the competing vehicles that are in a $10,000 lower price bracket.
But fine, if you think that the car sales are going to have an issue, you can focus on the software and services. And in many ways, it feels a little bit like the Apple comparisons when people thought that iPhone sales were an issue and were potentially flagging. They said, well, but Apple has the ecosystem and the services. And now that we're approaching the arrival of that 5G phone, people are shifting back to saying, well, great, the iPhone sales, because that's what matters. So you can talk up the software and talk up the idea of a day when Tesla might be selling its battery to even rival car makers. That would be a huge business. But for now, it seems to me like the actual core business is doing pretty dang well, doesn't it? The car sales.
Is it too soon to say I'm glad the pandemic happened? Through the lens of a Tesla stock investor, of course. Now, the reason I say this is quite simple. The pandemic has given Wall Street and the wider market a clearer view of what Tesla is actually doing, how well they're actually executing, how agile and lean and efficient their business is. And of course, on the flip side, the pandemic has highlighted how completely and utterly traditional automakers are. Said it before, I will say it again, I'm going to keep saying this, it's going to be so great to clip these in 5 or 10 years. Almost every single legacy automaker alive today will be bankrupt, have been acquired or merged, or they'll be licensing technology from Tesla and still alive. Mark my words. And I believe that the market's wider recognition of this obvious, inevitable fact is also carrying a lot of weight in terms of people buying Tesla stock at these levels and the endless upgrade after upgrade after upgrade. Gather around, guys. I've got a quick story for you, a little bit of a history lesson. So around 65 million years ago, not that I was there personally, but there's pretty compelling evidence that this did actually happen. And Stephen, no. That's not what it says in the Bible, mate. I'm not, you stop lying. No. Gee, that was a bit weird, wasn't it, guys? Sorry, I don't know what happened there. Anyway, a very big thing from space came and hit the Earth and kicked up a whole pile of dust and dirt and all sorts of other shit. Swirled around, clouded the atmosphere, darkened the skies, and an ice age came, and guess what happened? As a result of that, the dinosaurs went extinct. It didn't happen instantly. They didn't get obliterated at the moment of the impact. It took time. The place that we're at now in this landscape of the transition to electric vehicles, the impact has happened. Now it's just a matter of watching the extinction play out over time.
And I mean, just thinking about the battery component, think about even those with Tesla cars. One of the biggest issues, especially for those outside of California, has been the lack of superchargers, right? When you are on a long road trip, you have to find a way to fuel up.
What?
This idea of the million-mile battery would be a game changer, even if you don't think about the possible repercussions from the outside competitive landscape with those players having to rely perhaps on Tesla's superior battery. I think one thing that really stood out to me, and Jefferies is very self-aware, right, is that when they initiated coverage on Tesla in September 2017, 3 years ago, the note was titled Permanent Revolution, which is literally the exact title of the note we're looking at today. Permanent Revolution continues. And I think kind of to sum up what all of us have been talking about, the core fundamentals, the lofty goals that Elon Musk had first sort of set out years ago, they're actually coming to fruition. And I think because analysts for so long didn't believe in operational excellence from the brand, they believed in the vision perhaps, they believed in some of these pipe dreams that were coming out of the Muskian empire, but in reality, they were not able to fulfill a lot of those demands. Even the skepticism surrounding the Shanghai Gigafactory for so long, honestly, Musk kind of disproved that, right? They were pretty much up and running when they said they would.
Just to clarify, Tesla was actually way ahead of schedule on the Gigafactory Shanghai construction. It was already an extremely aggressive construction timeline, and they beat their own insane timeline.
Again, I think the bar maybe was quite low because these ambitions seem so kind of out of reach for people who are looking at sort of the financials of this. But ultimately, the core concept and the core strategy is the same. It's just back then, it was an undervalue play, and now it seems like there's more room to run.
This is a great point, completely fair. I think most of Wall Street, most people in the wider market, most people in general just simply do not believe the stuff that Elon says he plans to do. But as I've said in the past, don't bet against Elon. Oh, gee, that sounds good. I might make a shirt. Oh wait, I already did. Link in description. And seriously guys, thanks to everyone who's supporting the merch store. It's awesome to know there's over 100 of these shirts now parading around the world warning people when Elon says he's going to do something, probably worth listening to.
Yeah, and I think, Mel, that kind of speaks to the entire style of investing that's done well in the last decade has been what companies are growing quickly and what companies have this huge opportunity. And I think a lot of people spent a lot of time in the last decade saying, well, the financials don't make sense to me. I don't like the numbers here. People were shorting Amazon all the way and Tesla all the way, and they're not exactly analogous, but the people who just said, well, they're going to be bigger, it's fine. They've made a lot of money, like a lot of money. And I think we see that trade. People are catching up to that trade even today. And that's obviously what's fueling this market today, the last few months.
Hey, I got to hand it to these guys. I'm impressed. Within a few months, Yahoo Finance in particular has gone from no fucking idea whatsoever about Tesla to, well, they've got a bit of a clue now. Credit where it's due. Well done, guys. I'm impressed. As I said towards the beginning of this video, it's extremely important what the mainstream finance media narrative is around this company, and the depth of understanding has expanded. Tesla's no longer an automotive manufacturer. Tesla's now an automotive manufacturer with a huge lead in a technology that's going to be adopted by the wider market, and they make software, and they've got a battery technology lead. I'm really glad that Tesla's stock has just rocketed off. As expected, I didn't know when, but I knew it would be sometime in the next 5 or so years, because it's caused everybody to take a second look and go, what did I miss? And by doing so, many people, many analysts, many retail investors, many shorts, many bulls, bears, everyone in between is now looking at the company and realizing, oh, this matters. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And of course, don't forget your free stocks with WeBull and Stake. If you're in the US and you open a new account with WeBull using the link in the description and deposit $100, you'll get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, the UK or New Zealand, you can get a free stock with Stake, also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.